You're watching Masters in Trading Live with Jonathan Rose.
Hello, friends. What's up, everybody? My name is Jonathan Rose. I'm the owner of Masters in Trading, and this is Masters in Trading Live. Every day the market's open, 11 o'clock Eastern Time. I'm going to get on here and talk about the market, and once in a while, we'll even share our trade of the day. So today is, what is today? Wednesday. Happy Hump Day, everybody. Today is Wednesday, middle of the week. What are we looking for? Well, yesterday we set up the week. We did the week ahead, right? Looking at non-farm payroll towards the end of the week. That is a major, major catalyst towards the end of the week. But what did we have yesterday? Well, we got under our key line in the sand, and the volatility measures that we follow all started to spike. So today's presentation is going to be, what do we do when vol spikes? What do we do when volatility spikes and the market starts to get hit? And then you look at your portfolio and you're like, I'm in trouble. If the market continues to get down, I am losing a lot of money every time the market ticks down. What can I do? So that happened yesterday. My immediate reaction, vol spike. Okay. Are you okay? Do you need short deltas? When you're long stock, that's called being long deltas. When you're short stock, that's called being short deltas. Why is it? Listen, if the stock's at 10, the 5 strike in the money deltas, in the money call options, with 1 day to expiration, they're just stock. So one of those 5 strike calls is the same as being long 100 shares with the stock at 10. Those are long deltas. So when VIX spikes and the market's heavy, what you don't want to do is just, oh no, you're just long 5 stocks. You're long deltas in 5 stocks. So we want a bit of a balanced portfolio where we're not only long stock or long deltas, we're also short stock or short deltas, because that helps balance out our risk. So that's what we're going to talk about today. The volatility spike, short deltas, IBM, because IBM is so strong right now. And then we're going to look for correlations. Okay, let's go to the slide deck. I think you guys are really going to like today's presentation. Let's start with talking about VIX term structure, because in yesterday's presentation, I mentioned the VIX 9D. VIX 9D, it was trading at 1650. And we said anything above 16 is very, very bearish. Well, the market, or the VIX 9D, never got under 16. It continued to go higher, which is just incredibly, incredibly bearish. Let me start it here. Awesome comments yesterday. My man Fat Buddha, I'm new to this group, so my memory bank is pretty much empty. What we talk about is building your memory bank through experiences. Okay? It's always like any sport. You could practice all you want. Golf. You can hit balls for 1,000 hours on the range. Everything changes when you get on a golf course, when you get in the game, when you're forced to build your memory bank through experiences. What happens often, and why I'm always preaching patience, hold until expiration. What ends up happening is when traders see a nice winner, they're keen to take it off right away because they want to lock in that profit. Oftentimes, people will lock in the profit and they'll want to get in the exact same trade. That doesn't make any sense. You do want to be patient. Make good decisions. Let the market work over time. That's what we're really trying to do. So I appreciate these nice words, guys. Here's the process that I went through yesterday in thinking, okay, VIX spikes. We have a community. How can I make sure that everybody is protected? And in order to make sure the community is protected, when volatility spikes and the market goes down, here's my thought process. VIX spikes, number one. How can we get some short deltas? How can we protect ourselves? We're going to look at the expected move. And then after looking at the expected move, we're going to dive into correlations. So I got a bunch of charts for you, because the first thing that we do is we're looking at the VIX, okay? And we're looking for that VIX spike. Now, what we're looking at here is we are looking at the VIX 9-day in the red, and we're looking at the VIX 30-day, which is in the yellow. So as the VIX spikes, like it is now, we need protection. We need to find places to get bearish. Whenever the VIX is spiking, the market's going to go down. Whenever the VIX is chilling out and sells off, the market is going to go up. So that's the first thing. Where can we find short deltas? So where can we find short deltas? I thought this was crazy. I couldn't believe it, in fact. Because if we look around and we see what's going on, obviously we know SMCI offered. NVIDIA offered, trying to bounce back a little bit, actually bouncing back pretty smartly right now. IBM taking out its highs. I wouldn't be surprised if right now the big buzzword is AI. You know what's going to be passé soon? The term AI, because everybody's going to be talking about quantum computing. The next great buzzword, quantum computing. Who's leading quantum computing? Well, IBM. So as the market sells off and AI weakens across the board, interesting to note, the biggest quantum company, IBM, is taking out highs. Something to notice. So now, once I realized that IBM was strong, VIX spikes, short deltas. Where can we get short deltas? Well, IBM is right by its expected move. Well, then what's the next step? Do we just get in there and buy puts on what just might be the healthiest stock or one of the healthier stocks? I don't know. Probably not. Instead, look for correlations, right? IBM, super strong. We don't have to call it expensive. It's strong. Now, look for correlations. This is what separates traders. Once we find a name that's potentially strong, because we're looking for short deltas, at that time, the next step is how can you trade IBM, right? So IBM is here. What we want to do is find a way to tie this sucker down. How do we tie something down? You know those dog leashes like at a beach where somebody will hold their dog down in a leash and the dog can run 360 degrees. It can run wherever it wants, but it can't run too far, right? That dog is tied down. We need a way to tie down IBM because everything can't be expensive. You always have to find something that's equally inexpensive. I did a little study when I found IBM, and immediately, IBM is so strong, I want to find correlations. And there are 3 stocks with correlations that I found above 90%. And those are going to be FI, EXLS, and then IBM. Over a 90% correlation right now. Why are they so correlated? Well, they operate in the same industry. They're going to have a similar client base. They're going to follow similar trends. Investors often group these stocks together, and all 3 companies may have comparable reactions to overall economic conditions. So when I go back here and I look at the difference between these three, IBM, FI, and EXLS, which is here, always looking for something to tie it down. Let me pull up a chart again of this. There we go. And here's what it looks like if I pull up a chart. I'll often get these questions when you're looking for correlations. How far back do you go? It's healthy to look at the most amount of data first. Here's what it looks like if I go back to 3 years using a weekly. 3 years using a weekly, you can see, right? They are moving together. In 2023, EXLS broke apart, got pretty strong relative to the others. But right now, they are super, super strong, moving together over the last 3 years. But if somebody liked that idea of potentially protecting their portfolio with short deltas in IBM, well, if that's the case, you'd want to protect yourself also using EXLS. Now, this is, I would say, a slightly more sophisticated approach than many people are looking for. What you want to do, as opposed to just looking like where's the next place you can make 100%, 1,000%, whatever it is, look at your holdings. Do your research beforehand. Be confident with your positions. Let the market do what it's going to do, and then just protect. If the market gets killed and your position's not working out, hedge. Find a way to protect yourself when the market goes down, when the market goes up, when vol spikes, when vol comes right back down. In the all access portion of this presentation, we're going to go over some of our active trades and answer some mailbag questions from our Discord. Thanks so much for watching live. Jonathan Rose, 11 a.m. Eastern Time.